Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments. A little late, got a little hung up today. It is 6:17 as I'm doing this. March corn today. We'll just do a recap of what happened. We'll talk a little bit about what's going on right now. March corn finished up 5.5 cents at 435.5. If you look at that on a retracement level, that's a pretty good bounce. We still have a lot more work to go to get back to where we were prior to the USDA report. That's 448. So we got about another 15 cents to go to get back there. The flip side, the beans, of course, we've clawed back a huge chunk there. We did, have that big sell-off from November down to the, you call it the report lows, right? A couple times went down to that 1037. I'm looking at March beans, 1172 to 1038. Took the steam out of a lot of people. This rebound, 1105 is halfway back. 1121 would be 62% back. That may be where we're headed here. After that, it'll be a pretty good retracement. We still have a little bit more ways to go. And again, this is all because the Chinese are considering buying more beans from us. I can't imagine what's going to happen if they change their mind and say, we considered it and we're out. So use this to your advantage. It's just the beginning of the year. It would be very powerful if they did agree that they were going to take way more of our old crop corn. That's why we bounced like we have. However, history has shown us that sometimes these initial reactions are wrong. So I want to see where we are next week. In the meantime, get after it, take advantage of it. It's a nice thing to see. I'm looking at Chicago wheat as well. We finished up today at 535.5. Nothing gets interesting till in March wheat until we take out 560. So it's a good bounce. But again, even at 535, we're basically only 30 cents off the contract low. So it's trying. We've been in this place before with wheat trying to rally, and it hasn't followed through. In the fat cattle market, down $6. The fat cattle, I think, took it on the chin the worst because of the shutdown of the JS plant. That did finish the day down at around 235.60, and we gapped lower. The March feeders managed to finish the day at 364, down 6. They did not take out 360. We opened up the morning, we were limit down, we came off limit down, we bounced. But for the time being, I think that we're going to be playing the old low game, and that for March feeders is, there's support there at 360. Then the January 30th low is 58. If that fails, it opens up the door at 54. So there's possibly another $10 worth of downside risk here if they get after it in the feeders. And in the lean hogs, again, even if you've done nothing all year so far, you feel like you've missed out on hedges, we're just a little bit off after almost having a $19 rally. So yeah, we've pulled back a bit there in April in April lean hogs, but still a lot of meat on the bone. Wasn't that long ago the April lean hogs were down at 81. So I'll take 17 bucks off the bottom. It's not quite 19, but I'll take it. So even if you've got nothing hedged, set a hedge tomorrow. As I'm sitting here talking to you, it is about 6:15. I can't pretend like there isn't a little bit of red on the screen in the stock market, but that's not unusual. You got to remember, I did the math. We're up 45% from April. Last April was a 2-year low. If we go down there, and then just a week ago, we were at all-time highs. We were trading at 70.45. So there's a lot of meat on the bone there for the stock market. I know people like to get jazzed about, 2, 3, 4, 5% moves. Generally, everything 5% or less is noise. Could we have a bigger correction? Yeah, we absolutely positively could. But it's, not every day that we go lower a little bit is the beginning of the end. I think if anything we've learned in the past 15 years of watching the stock market, and the same thing can be said for the Dow Jones. Back in April, we traded down to, believe it or not, we were under 37,000, 36,700. And the high of the move was 49,900. Just couldn't get the 50,000 print. We still haven't gotten that. We've been trying to get the 50,000 print since January 7th. So to sit here and say, "Oh my goodness, the stock market's down," look out below. Again, you got to remember when we're near 50,000 in the Dow, when 1% moves 500 points, right? 5% moves 2,500 points. So we are going to have a correction. We always have corrections. If you think you've got too much risk on the table, there are strategies you can do that. You can either take risk off the table or look for protective puts. The problem is, like everything else, you buy the puts and then you don't need them, then it's money that was wasted. You never know if the puts are going to be the ones that pay off. So, and let's face it, we've gone up 45% in since April, May, June, July, August, September, October, November, December. We've gone up 45% from the low in 9 months. It's hard to keep waking up going, I think I need to buy put. And that's exactly what happens. The market wears you down, makes you think you don't need anything. You don't need to sell stop. You're going to be fine. We're going to the moon. And then we get a bigger correction. So caveat emptor, these are still great levels. And I think that's all I'm going to talk about right now. You guys have a good night. We'll be back at it tomorrow morning, early on. I'm going to try and get things out early. I'm going to be traveling tomorrow. Everybody's heading out for the Super Bowl weekend, obviously. I'm not heading to see the Super Bowl, but I am going to go see some friends of mine. We're going to sit in his living room and watch the Super Bowl. So, all right, this is Chris Robinson, 312-638-8868. Have a great night. Take care. Oh, one final comment. I'm sorry, I can't sign off without saying this. You're probably not even listening anymore. Got to talk about silver. If you do the retracement, if you start at the April low, which was basically $30, right? I'm going to go back there to April. It was 27.55. 27.54, right? I'm just going to call it $30. If you run that retracement from that low, from 27.5 all the way up to the all-time high that we hit, at 121 and change. This 64.50 area is very, very key for those of you that pay attention to the Fibonacci's and those retracements. We are right on the 62%. So something to watch there. I'm not calling a bottom. Lord knows I wasn't calling a top. I'm not going to call a bottom, but it is an area that's attracting a lot of attention because it's a very simple retracement. Now, the rub with retracements, it's always like, well, where are you going to start? From which low to which high? Well, we know which high. We want to use the all-time high, but where do you start the bottom of the rally? That is a judgment call. But if you've got nothing done, if you're curious, I would certainly consider that $27 to $37, the $27 to $30 level is kind of a base. So this 65 area is very key. And again, it's hard to believe that last week we were at 121, right? So it takes months and months and months and months to rally. And then in the matter of 2 weeks, we get back 60% of the rally. This is Chris. Have a good night. Take care.